So hi everyone, it's me, your manuishu, and welcome to my channel manuishu ACCA classes. So in today's video, we are going to do intangible non-current asset question from the BPP kit. So if you are watching my video for the first time, please subscribe to my channel and share it among your friends so they could also have the benefit, and don't forget to hit the bell icon for more updates. So let's start the chapter. Question is 9.1. Identify by clicking on the relevant box in the table below whether each of the following statements about research and development expenditure are true or false according to IAS 38 Intangible Assets. So before dealing with question, I would like to say something. So in F3, for each and every chapter there is IAS, IFRS. So just go through it what exactly IAS or IFRS is saying, because it will be helpful to you in F7 as well. So question is, research expenditure other than capital expenditure on research facilities should be recognized as expense as incurred. Obviously, if in case of research and development, if it didn't meet the criteria, that is the pirate, still we will recognize it as expense. So it's true. Research expenditure other than capital expenditure on research facility should be recognized as an expense as incurred. Even though in future it meets the criteria, we can't just whatever we have recorded as expense in the past, we can't just capitalize in the future if criteria are met. So it will be recognized as expense. Okay. So in deciding whether development expenditure is qualified to be recognized as an asset, it is necessary to consider whether there will be adequate finance available to complete the project. Yeah, there are few criteria you might have haven't seen in the book, that is pirate. Okay, just a second. Okay, so there are few criteria that is pirate, and one of them is as the question is telling that it is necessary that adequate finance is available to complete the project. So this option is true. Okay. So third is, development expenditure recognized as an asset must be amortized over period not exceeding 5 years. There is nothing such like a rule to amortize it 5 years. So this is option. This statement is false. Okay. So next is, research and development chapter is also in the F7. So just don't skip this chapter. Try to understand and made a good base. 9.2. According to IAS 38 Intangible Assets, which of the following statements about research and development expenditure are correct? Okay. If certain conditions are met, an entity may decide to capitalize development expenditure. If certain conditions are made, entity must, not may, it must be capitalized. Okay, if the criteria are pirate, P, probable flow of economic benefit, intention to complete, and reliable measurement of the cost, and adequate resources available, and technical feasibility, and easy to use, and like this, whatever the criteria was there. So if all these criteria are made, we must capitalize it as development expenditure. We can't choose whether we capitalize or not. So this is false. So if one is false, we can eliminate the option that A and B can't be our answers. So we can eliminate the option A and B here. So from C and D, they will be our answer. So research expenditure other than capital expenditure on research facility must be written off as incurred. This is the same line as a verb. So this is a true. So true. And from this we can figure out our answer. That is the option C is our answer, right? So let's look at the statement 4. Capitalized development expenditure must be disclosed in statement of financial position under intangible non-current assets. Obviously, if we capitalize the expenditure as development expenditure, so we must be disclosed. It is under the asset side of financial position, statement of financial position, as a intangible non-current asset. So option 3, 2. Sorry, I skip out. I think option 3, right? Capitalized development expenditure must be amortized over period not exceeding 5 years. This statement is same as above, so this is false. So option is 2 and 4 is correct. Okay. So 9.3. According to IAS 38 intangible assets, which of the following statements concerning the accounting treatment of research and development expenditure are true? Okay. Development cost recognized as an asset must be amortized over a period not exceeding 5 years. This is the false. So this statement is as same as above. So research expenditure other than capital expenditure on research facility should be recognized as an expense as incurred. This is true. This statement is same like as we discussed earlier. In deciding whether development expenditure qualified to be recognized as an asset, it is necessary to consider whether there will be adequate funds available to complete the project. Obviously, this is one of the criteria which we discussed earlier. So, 4 is development project must be reviewed at each reporting date, and expenditure on any project no longer qualifying for the capitalization must be amortized through the statement of profit or loss and other comprehensive income over a period not exceeding 5 years. Obviously, this is incorrect. So, if it doesn't meet the criteria, then we will show it as expense in the P&L. Okay, and so this is the false, and option 2 and 3 is correct. So option C is again our correct answer, right? So next question is 9.4. Which of the following cannot be recognized as intangible non-current asset in GHK statement of financial position at 30 September 2021? GHK spent 12,000 researching on a new type of product. Sorry, what is the question? Which of the following cannot be recognized as an intangible non-current asset? Okay. GHK spent 12,000 researching new type of product, and research is expected to lead a new product line in the 3 years time. The statement is already telling it is researching. This expenditure has been spent on the researching a product. So it cannot be capitalized as a development cost. So this option A is correct, right? I mean our answer. So option B, GSK purchased another entity began on 1st October 2080. Goodwill arising on acquisition was 15,000. Obviously, as we have studied in the consolidation, if one entity acquires other entity, then goodwill obviously arise, and we will show it is it under the intangible non-current assets of asset side instead of the financial position. So option B can be the answer as per the requirement. So see, GHK purchased a brand name from the competitor on 1 November 2080 for 65,000. So internally generated assets like brand, goodwill cannot be capitalized by the entity, but in case of like purchase, it has been purchased from the other entity, it can be capitalized. So option C also, it can be recognized. GST spent 21,000 during the year on development of a new product. Product is being launched on market on 1st December 2021 and is expected to be profitable. So obviously it is meeting the criteria. So it will be capitalized as also it will be recognized as an intangible non-current asset. So option A is our answer. 10.5. According to IAS 38 intangible asset, which of the following are intangible non-current asset in the financial statement of Lota company? Okay, a patent for a new glue purchased for 20,000 by Lota company. Obviously, patent is our intangible non-current asset, so it will be shown as an intangible non-current asset. Option 1 is right. Development cost capitalized in accordance to the IAS 38. Obviously, the straightforward statement. So option 2 is also correct. A license to broadcast a television series purchased by Lota company for 150,000. Obviously, license will be also an intangible non-current asset, so it will also be capitalized. State of art factory purchased by a Lota company for 1.5 million. So I think option 4 is our tangible non-current asset. So that's why it won't be recognized as an intangible. So option 1, 2, 3 is correct. Okay, 9.6. What is the maximum amount of development cost that must be carried forward at 31st July 20x6 under the IAS 38 intangible asset? In the first year of trading to 31st July 20x6, CAM company incurred the following expenditure on research and development, one of which is related to the cost of non-current assets, 12,000 on successfully devising process for converting seaweed into chemical XYZ. Okay, and 60,000 on developing a head pill based on a chemical Z. No commercial use has yet been discovered for the chemical X and Y. Just a bit, okay. And commercial production and sales of the head pill commenced on first. Okay, so question is telling what amount we can of development cost can be carried forward as an intangible asset. So 12,000 on successfully devising process for convertible seaweed into chemical X, Y, Z. Okay, and 60,000 on developing a head pill based on chemical Z. No commercial use has been discovered for the chemical X and Y. So commercial use has not been discovered for X and Y. 60,000. Commercial production and sales of head pill commenced on 1st April. What is our year? It's July. So April, May, June, July. 4 months. 4 by 12. So here what the question is telling, out of the expenditure which are incurred, how much we will capitalize as an intangible asset, which will meet the development criteria. So first is 12,000 on successful devising process for converting seaweed into chemical X, Y, and Z. So okay, it can't be capitalized because it's a successful devising process for converting seaweed into chemical XYZ, and 60,000 on developing a head pill based on chemical Z. No commercial use have been yet been discovered for the chemical X and Y. So X and Y can't be capitalized because it didn't meet the criteria. And commercial production sales of head pill commenced on the 1st April 20x6. So it commenced on 40. So in case of intangible assets, when the commercial production is begun, after from that date to reporting date, from that date we will start to amortize those intangible assets. So from 1st April 20x6, commercial production has been begun for the head pill. So we will amortize from this date. So April, May, June, July. Our year end is reporting date is 31st July 20x6. So 4 months has been, right. So I had calculated amortization for the 4 months. You can see in the formula I have taken the 60,000 into 4 divided 12. For the first I divide by 5 because and are expected to produce a steady profitable income during the 5-year period before being replaced. So 5 year is life, 5 divided with 5, and just second for just multiply by 4 by 12 to calculate the 4 month amortization. So it is 4,000, right? So when we will subtract this amortization from the 60,000 cost which has been capitalized, we will get 56,000 as the cost which should be carried forward as an intangible asset. Because this 60,000 has meet the criteria of development criteria to capitalize, that's why we will amortize this cost? Yes. Okay, so your option is B, right? Okay, so 9.7. Let's read out the question. A manufacturer incurs the following cost: 38,000 developing a new technique that will be put in the place shortly to cut the production cost. This is the last of our criteria, that is E. And 27,000 researching a new process to improve the quality. It's for the researching, so it will be expense, right? To improve quality of the standard product, and 8,000 on market research into commercial viability of a new type of the product. How much should be charged as research and development expenditure in the profit or loss? Ignore amortization. So obviously 38,000 is developing a new technique that will put in the place shortly to cut production cost, and we don't have given the how much life of the those assets, or we don't have even given the commercial production date of commercial production begin. So 38,000 is capitalized, so we won't calculate amortization here. And the second is the researching a new process. Research expenditure are expense shown as expense in the P&L. So it will be shown in the profit or loss, 27,000. And again 8,000 is for the market research, so it will be again shown as the expense in P&L. So 27 plus 8, I think 35. So option B is your answer. Okay. So 9.8, which two of the following condition would preclude any part of development expenditure to which it relates from being capitalized? Development is incomplete. It won't preclude any part of the development expenditure to being capitalized because there must be intention to complete those project or whatever the. Okay, the development is incomplete. There must be intention to complete. Not it won't matter whether it is complete or not, but it should. There must be intention to complete. This is one of the criteria. And benefit flowing from the completed development are expected to be less than its cost. Benefit. What is the question? Is preclude. Let me tell Google. What is the meaning of preclude? I think it is exclude, preclude, prevent. Okay, making impossible. So obviously, a benefit flowing from the completed development are expected to be less than its cost. Obviously, it will preclude or exclude from being capitalized. There must be the benefit greater than its cost, right? We have studied. This is one of the criteria. So funds are unlikely to be available to complete the development. Yes, we have studied that the adequate finance must be available, so it will be also one of the criteria. So it will preclude 2 and 3 will preclude the any development expenditure to being capitalized. Development is expected to give rise more than one product. This is not any criteria. So 2 and 3 is our answer. Okay. For development and expenditure chapter, I must say, while dealing with the question, just remember those criteria, which is very important to just figure out whether it should be capitalized or not. And for amortization, after being capitalized, commercial production is necessary for amortization. Like in case of tangible asset, whether we are using or not, but it must be. Uh, I mean to say, जैसे हम लोग टैंजिबल एसेट में हम लोग एसेट को वर्किंग कंडीशन में आने के बाद हम लोग डेप्रिसिएशन चार्ज करने लगते हैं, बट इट वॉन्ट मैटर वेदर वी आर यूजिंग इट और नॉट. Okay, so but this will not be same case in case of intangible asset. In intangible asset, the amortization is charged from the date where on which commercial production begins. So okay, next question is 9.9. Theta company purchased a patent on 31st December 2003 for 250,000. Theta company is expected to use the patent for 10 years, after which it will be valueless. According to IS 38 intangible assets, what amount should be amortized in Theta company? It is on a profit or loss and other comprehensive income for the year in 31st December 2004. So it's quite simple. So Theta company purchased the patent on 31st December 2003, and question is asking what amount to be amortized for the year in 31st December 2004. So simply, and we have given the life as well, that is 10 years. So we will simply took this cost and divide it by 10. So it will be 25,000. It's quite simple, I think. Okay, so PF purchased a quota for a carbon dioxide emission for 15,000 on 30 April 2003 and capitalized it as an intangible asset in its the financial position. PF estimates that quota will have a useful life of 3 years. What is journal entry required to record the amortization of quota in the account for the year in 30 April 2009? Okay, so it has been purchased on 30 April 2006, right? And capitalized it as the intangible asset in the financial position. And on that date, the company estimate its useful life of 3 years. Okay, so 3 years. So amortization for the year will be 5,000 per year, right? And what is the journal entry required to record the amortization of the quota in the account for the year in 30 April 20X9? So the 20X9 question is asking. So one thing I would like to say here, the question is asking for the year, right? The question is asking for the year, not as at the year into like. So if the question is asking for the year, so for the year, journal entry will be debit amortization and credit accumulated amortization, right? So so out of A and B will be our answer. So as question is telling for the year, it means option B. If question haven't told for the year, like as at the year in 30 April 20X9, in that case our answer will be A. But question is telling for the year, so I think option B is our correct answer. Hope you understand what I'm telling. So 9.11, what is the purpose of amortization? It's same like depreciation, to allocate the cost of intangible non-current asset over its useful life, obviously, and to ensure the funds are available for the eventual purchase of replacement of non-current asset, no, and to reduce the cost of intangible non-current asset in the financial portion to estimate the market value, to account for the risk associated with the intangible asset, no. So only the purpose of the amortization or depreciation is to just allocate the cost of intangible asset over its period or the useful life of those assets. So option A is correct. Which of the following items that all generate future economic benefit and whose cost can be measured reliably is an intangible non-current asset? Computer hardware owned by the business. It's tangible. So option 1 is not answer. 2. Operating software that operates the computer hardware in one. It is also not a intangible asset. So a patent bought by a business Patent is an intangible extension to an office building owned by business. It is also tangible, so option 3 is only correct answer. ऑप्शन 2 इसलिए नहीं हुआ आई थिंक, एज पर माय व्यू, कि अब सॉफ्टवेयर को यूज करने के लिए तो ऑब्वियसली वो डिपेंड है कंप्यूटर के हार्डवेयर पे, right? Without it, it is useless. So I think that's the reason we can't consider this as a intangible non-current assets. So only option 3 is our right answer. So next question. Oh, chapter finished. Okay, so guys, hope you understand what I am telling. If in case you have a doubt, just let me know in the comment box. I will try my best to help you out because it has been long time that I have given the F3. So if you have any kind of doubt, so do let me know in the comment box. And if you're watching my video for the first time, please like and subscribe to my channel and share it among your friends. Thank you guys for watching my video. Have a good day. Bye.